Welcome to a short update today in which we discuss the actual crash of Bitcoin. But before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also check out my website 8global.com and my other social media platforms if you like our content. Yesterday we've had a ton of negative news kicking in, which we will be discussing tomorrow's update. But today we're going to discuss more important news, which is the unemployment data. As you might recall, Powell has been stating that he wants to increase the rate hikes and he wants to hike by 50 bips in the upcoming meeting. However, he has been mentioning that 25 bips is the most likely case, and he wants to increase that given the fact that he can't really beat inflation at this point. So in that regard, we have to look at a few metrics to be able to actually determine whether his policy can continue or not. One of them is the actual case of the unemployment data, which we've had some data on Wednesday which stated that the non-farm employment change ADP created more jobs than expected. Also, the job openings have been rallying more than expected. And then we've had the unemployment claims yesterday, which is a terrible number, the highest rally since October 2022, indicating that we might be getting into a state where the unemployment data is going to rally even more, inducing that we are potentially getting into a severe recession. Hence why we are going to have a case of Powell not continuing the policy, but that is to be decided. Today we've got some more data, which is the fact that we've got the unemployment rate, which is 3.6% at this point, while the actual number of expectations was 3.4. So we're actually rallying up again. We've not been seeing that since November, and it's in line with the unemployment claims from yesterday. On the other hand, the positive note is that the non-farm employment change still has created more jobs than expected, but it's less relevant than the unemployment rate and the unemployment claims. So now next week we are moving on towards CPI and towards some other important data points. Unemployment rate towards 3.6% is currently looking at a case that we are rallying with that, and therefore we most likely are not continuing the entire policy of the rate hikes in itself from Powell, and we are going to have a more upwards trending market. What do we see? The Nasdaq currently has been bouncing up given this news. It's still in between balances, but we have to look at a few other metrics before we can actually look at Bitcoin. When we're looking at the DXY, we can say that we are following the scenario that we made earlier, right? So we've got this recent high being taken out. Hence, we can see that DXY has been correcting relatively strong based on this data point here. It's still unsure, but we are seeing a rally here on the indices, and we're seeing a drop on the DXY. Now, when we're looking at the yields, we can conclude that we might be getting into top. So the 6 months have been trying to get above 5% in line with the fact that the Fed is going to increase the federal funds rate. However, we could not be seeing a continuation, as today we're selling off quite substantially, so the markets are not expecting the Fed to continue its policy. The same we can see on the 2-year yields. We can see that we are selling off here, inducing that we are not continuing the policy that Powell tries to do, and therefore we are seeing this sell-off taking place. And those are important. The same with the yields is lining up with the fact that there's a bank collapsing at this point, and therefore we cannot sustain the policy, and it is very likely that he will pivot relatively fast. Now with gold, we can see that there is some strength. Actually, we are continuing the rally on gold since we have been getting this terrible news. Gold is usually a great one to have during these times. Now, what is Bitcoin doing? Bitcoin has been crashing substantially, right? So it has been dropping quite heavily, and therefore we can see that we have been dropping beneath the level of 20.3, and we have been closing the CME gap. Right now we are getting into a slight bounce, which is a good sign. It's good that there's some buying opportunities at this point, but it's still too premature to say that we are actually bottoming out, which means that we still need to gain a few levels if we want to clear this out, which means that we need to reclaim 20.6, and actually we need to reclaim 21.4. And if we reclaim 21.4, that is going to be a trigger for continued upward strength, which means that we can start retesting the highs. It is a very vulnerable market at this point, and it's still debatable whether we're going to reverse from here or whether we're going to continue to fall. And when we continue to fall, we should be looking at cases around 18.1 and 18.6 as potential levels for long entries. And we also know that next week's CPI's data will be relatively important. So at this point, we are into a downward trend. We are in need for a potential case of a bottoming procedure. Then we are looking at a bullish divergence case, which you currently could have been seeing on the 1 hour, as you can see here. Hence, we are getting a slight bounce. Crucial levels to watch in this bounce is 20.6 and 21.3, which we can also line up with Ethereum and a few of the other altcoins at this point, as Ethereum is also bouncing with the bullish divergence, indicating that short term we've got a little bit breathing time until we are going to continue the correction and have a few lower levels to be tested. I hope you have been enjoying this update. I'll be back tomorrow again.